All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here just about an hour, 5 minutes to go till the hour mark. Eventful morning market, right? And you can see we had this kind of sell off into the close yesterday. Not too uncommon in this type of environment. Remember, the environment is one of a lot more volatility, right? That is absolutely what the environment is what we've seen from the metrics. And then overnight we get the Chinese economic data, which was a little soft, but nothing too bad there. And the market in S&P futures were up at that time. And so I kind of chuckled when I woke up this morning and saw, headlines kind of saying, market down on weak economic data in China, because the market didn't start to fall until Europe opened. The weakness happened during Europe, right? And it accelerated here after the U.S. retail sales number, which was rather abysmal. But then you see this spike up that we've just had, and this is a massive volume spike. 50,000. 20,000 is a huge number to have on 1 minute in the market. 50,000 is driven by news. It's driven by a headline, and the headline here is that U.S. President Trump is delaying some of the auto tariffs here. So what's it do? It kind of puts the market back in this stance of, okay, maybe there'll be a softening of some of the hardline rhetoric that we have heard between the two parties here, China and the U.S. So we see the spike up. Small caps are still red, but we're seeing money flow into tech. We're seeing money flow into some of the oversold types of names. Some of the recent laggards like Facebook, which had been lagging. Popping up here nicely this morning. And so it's, we're still seeing the Caterpillars and the Halliburtons in the red. The Dow is still slightly in the red here, but definitely most things well off of their lows from here this morning. We do see the banks, lagging here, lagging the way. If we look at the XLF, you can see the XLF is near its highs of the day, but it's lagging. Bank of America lagging here. These open pretty weak this morning, and some of that just has to do with TLT and the fact that bonds just keep going up, and the bond rise environment is just not all that healthy for the banks here. And you can see the TLT hit a new high here today, and so to see some relative bank weakness, you just kind of look at the pullback of the banks. It's quite the antithesis of what we see in bonds, and the correlation between the two, or the negative correlation between the two, actually continues to be pretty strong out there. All right, here we are. We're an hour in, so let's go take a look at the challenge positions and trades. Let's start off with new signals. Raytheon bearish is signaling here this morning. And you'll notice I put used in challenge, I put a no. And why is that? Well, because I don't have the cash to put it to make the trade, to go out and make the trade. I'm in Procter and Gamble. I'm in JD, and so I have what, about $600 in cash, and so I do not have the cash to put this trade on. And as per the strategy here, we will not take off any trade. Right here, number 9, new trades are not entered unless cash is available. Current trades are not exited to accommodate new triggers. Right, so I'm not going to make the Raytheon trade, even though it is a trigger here today. Now, Procter & Gamble, JD, this is a 15-minute delay stock price, but you can see the current stock price, 30.12 let's actually get these reversed here. There we go. There's JD, and here we go with Procter & Gamble. My apologies there. But Procter & Gamble, it's between the exit and the profit level, so nowhere to exit there. Auto exit date is this afternoon, so if the option is not green by this afternoon, I'll have to move on out. And then with JD, stock's at 30.12, so nowhere close to the stock exit level, nowhere close to the profit level, so still in both. If we look at the option values, I'll update those here. JD is 235, and Procter & Gamble is 292. So 235 and 292. There we go. So, we're looking at about, $400 worth of gains here between the two trades as they sit at the moment. So nothing too fantastic, but, in the right direction, at least there, to start. And JD this morning was upgraded by I believe it was Nomura. I put it into the message feed there. Wasn't a real barn burner of an upgrade with a whole lot of, great rationale and reasoning. Looked more like a token upgrade. But we saw Alibaba earnings here today and this morning, and they really just confirmed kind of what we saw out of JD and the positives we saw last week out of JD. And Alibaba, gapped on up or spiked on up here as they reported, then pulled on back, actually went negative, but seeing a little bit of buy pressure coming into it here recently. But anyway, holding on to both of those, nothing really to react to with those. But the lack of cash does keep me out of the Raytheon put position. Let me show you that chart here on Raytheon real quick, and let's see. I have to switch over to Opera still, so my apologies. But here's Raytheon. We've been talking about this one for a while, right? And it's been in this consolidation mode. And it's breaking down from that here today. Has the downside directional trigger. Now this is one that's kind of interesting. It's one that we could see a whipsaw trigger. We've seen those with different stocks like Home Depot and whatnot. It would take quite a bit to create a whipsaw trigger here, but downside trigger here in for Raytheon, but we'll not trade that here. We have some that are getting close to the upside today as well as the downside. EOG could trigger by the end of the day to the downside. It would need to sell off about $1 from where it is right now in order to trigger. Chipotle Mexican Grill. This is one that had a really kind of rough slide into the end of last week and on Monday, but never triggered on the downside. And I was a little surprised by it just with the 3.7 action that we saw. But, it's going to be hard to trigger downside when the 391 is above 50, right? Well, we are now seeing a 3.7 crossover to the upside coming in here to Chipotle. We can see Chipotle actually trigger bullish before the end of the day here today. Another one is GOLD, and this is Barrick Gold. And you know where I stand on Barrick Gold. I'm very bullish long-term Barrick Gold. It has the 3.7 crossover to the upside, which is, something that's needed for a bullish signal. But you'll notice how far below the 50 on the 391 stochastics it is. And what's that saying? It's just saying it's trading near the low end of its, recent range, of its last 39-day range. And, the fact that it doesn't have a higher low come into play, keeps it from being a signal. And it is something, though, that this move could set up the next signal if we see some sort of rally pullback and, some sort of higher low come in. Obviously we'll see how it plays out. But, the first step is taken, or the groundwork is being laid to entering a bullish signal, but it's still probably at least several days out. Another one's MGM. This has actually more of a chance of setting a bearish signal as this rally, if we see this recent rally start to fade. Twilio. This one is like Chipotle. We saw Twilio get hammered on Monday, right? And it didn't quite trigger bullish right here on this little mini breakout, and it didn't trigger bearish on this drop. And I was kind of surprised on both. But here today, rallying on back, this is something that we could see trigger bullish very soon. It's not there today, or at least just yet, but getting very close. And then another one, and last but not least here, is Visa. Yeah, you've heard me talk about Visa over and over. It's just one of the best out there. And look, it's one that it's not immune to a pullback in the market, right? It isn't immune, but will it ultimately rebound? Yeah. I mean, you have the best of both. I mean, you have a tech company here that's on fire with monster revenue growth, that doesn't have to hold debt, that just kind of continues to be this kind of way for fund managers to be involved in the tech industry by owning a financial. And, it's a must-own for fund managers, has been for a long time. MasterCard as well. They're both, the same thing, right? These aren't the same as Capital One or Discover or some of those other card names that have to hold the debt. But, just making money on transactions, Visa, MasterCard, both of these very solid. Visa could be a signal by the end of the day here today as well. So a lot of potential signals coming in. We have the one on Raytheon here today, then a lot of potential here this afternoon. So we'll see how things shape up and set up here, and we'll react to them as they come, and continue to run with the challenge the way that it is running here. Okay, just kind of looking down the board, it's just a couple notables. Here's FedEx, right? You'll notice FedEx has not been able to go up on the up days in the market. Just hasn't been able to. It's down on the down days, can't rally on the up days. Yeah, it comes off its lows and everything else, but this is a stock destined to revisit its lows, and where I stand. I think it breaks those lows, and we're talking about a $120 stock, not a $170 stock when it's all said and done. And that's a very bearish view, especially for a big bad Dow, Dow component here. But FedEx, when we look at what the earnings have been, when we look at what the fundamentals are and the erosion that continues to happen, and then you look at their big cash cow of Amazon, really continuing to prime up ways to use FedEx less, and it's a story that that continues to erode, that continues to get worse, and we continue to see some heavy drop within those. Now, last stock I want to show you here is BHP. And BHP is one that I was asked about earlier, but we talked about this group, the NGLOYs, the FCXs. We talked about it back in January, and how they were incredibly bullish on their charts, the very bullish setups, very bullish fundamentals, and these things had great rallies. And then right here, we looked at them again, and we talked about them again, and we talked about, look, it's changed. It's changed. The environment for these is changed. This rally's over. And, that included NGLOY, FCX, and all of those. And, we've seen, BHP pull on back, Rio pull on back. These aren't monster, massive, big, bad, bearish pullbacks, right? These are kind of just trickles lower here. But, was asked about what do I think about them here going forward. And, it's one where I think they're in a little bit of a no man's land. FCX, BHP, Rio, a little bit in no man's land. But, I'd much rather own a Rio or a BHP than a FCX. Okay, I think investor appetite over the next little while is not going to be for the higher risk, and FCX is the higher risk. NGLOY is also a higher risk, associated there. So I don't think investor appetite is going to be there, to the same degree. I can't argue buying and starting to establish a position on something like a BHP here. And in fact, if we go and throw on the CCI like we talked about yesterday, for starting to build positions, you can see it's come down to this kind of not quite oversold territory, but getting on close here. So not a bad place to maybe add 20% of a position and look to add some more if it dips some more. But I would be surprised if we don't see these stocks revisit at least their 200-day moving average. And most times when these stocks visit their 200-day moving average, they break it. And I just wouldn't be surprised that we see that. We still have a little bit of ways till until the full retracement. So if we slap on a Fibonacci retracement, you can see we're at the initial retracement level, and that's where it's finding support, right? The ultimate retracement level, the full retracement level is, wow, ironically, down there at the 200-day moving average. So that would be my ultimate expectation that, if you're looking to trade it with options, you're looking to trade it higher with options, this 47, 40, 48 area is going to be the area that I want to pick it up in, not in the 51 to 52 area, just because down here it's going to have more upside potential. Right here, yeah, it could bounce, and you could pull money off of an option as it bounces to 53 or 54, and very nice money off of an option. But the risk factor, at least for me, is significantly greater than what it would be down here at the full retracement. So just wanted to comment on those and show those here. Now, as I mentioned before, we had some economic data here this morning, and I put some commentary into chat about it. Here let's go take a look at the Chinese data, industrial production and retail sales, right? And in month-over-month change, last month was 1% gain. This month, 0.37%. So a drop year over year, 5.4%. It's ugly, right? It's ugly, right? And it's one where what's it going to inspire? Well, China's going to take action, right? The one thing that China has from an economic standpoint that the U.S. just absolutely does not have is they have the ability to go in and tinker and to control things to a much greater degree. By they, I mean the government officials. They start to see things slide, they can step in and take direct actions to change things in a way that it doesn't happen in the U.S. in a democracy where you have Democrats and Republicans bickering, till the cows come home here. And so, what does a number dropping like this do? It says, hey, we're going to start to hear more from Chinese officials about easing programs, about loosening different elements of the economy to try to push things up and higher. Now, bears on China for many, many years have basically claimed, hey, at some point China's government's going to run out of the ability to do that. But that's been the argument for 20 years now. So, weaker than expected data, retail sales here. And if we come into, retail sales number, missed expectations, month over month, year over year, I mean, it's just, significant slowing. It's nothing different than what we have seen in the April data from around the rest of the world, right? The April data all over the world has shown this element, right? And the bullish argument is, well, May and June are going to show a snapback. Bears are like, hey, your snapback was February and March. Get over it. So anyway, that's the Chinese data there. And then this morning we saw the same thing in U.S. retail sales, right? I mean, it was an ugly number. There's just no other way around it. Retail sales month over month change was expected to grow by 0.2%. It contracted by 0.2% there. Which is, below the consensus range. Fine, you take out autos and you still miss. You take out autos and gas and you still miss. But the prior month's number was revised higher. And so, an ugly number, is it changing or shifting the trend, right? You can see the trend has gone from, this rise into this decline. So it's not really changing the trend. We still have the same thing. We have retail sales in the U.S. that are still growing, but whose growth of growing is slowing. Right, that second derivative element, right, that rate of change element, is diminishing. On the bright side, the Empire State Manufacturing number came in significantly better than expected. Now, here's the important thing about this: every piece of data we've looked at so far is April. This is May. This is looking at May data. We're halfway through May, and a significant bump up, beat the consensus range, beat last month, and you can see we're back. This is the highest number in 6 months for the Empire State Manufacturing number. So that's a pretty positive. That's something that's going to get the Bulls and Bears' attention from a fund manager standpoint. And go, wait a minute, okay, this kind of lays some groundwork for some possible improvement that, maybe you can't argue with some of the other data. So, the GDP number, here out of the Eurozone, the flash number, I made a comment on it this morning, and this is for the first quarter of 2019, so it's old data. But quarter over quarter, 0.4%, year over year, 1.2%. And it came in as expected, but it's just soft. It is just soft. We've been seeing soft growth in the Eurozone for, who knows how long now. It has been a very long time, and, it's pretty much what the market expects. All right. So that's the challenge, the economic data, the signals that are out there, and some of the signals that could come in later on today. No trade adjustments here. But we'll take a look at where things are this afternoon and react accordingly. Have yourselves a fantastic day, and we will talk to you later. Take care.